Good morning, afternoon, or evening, wherever you're logging in from, traders. Welcome to SSFTG, where we trade everything from futures to metaverse real estate. If it moves, well, we trade it. Hey there, John Henry here, SSFTG. Welcome to the market recap, review, and forecast. If this is your first time here, welcome, my friend. Pull up a chair and hang out with us for a little while. A quick review before we jump in. The first thing that we take care of, obviously, is looking at the markets across the board on the major 6 markets that we take a look at. That's going to be the NASDAQ, the S&P, Dow, gold, crude, and Bitcoin. We're going to be taking a look at the patterns and setups and everything that are going on, and if you need more information on the patterns that we're utilizing, you can find those in the live trade room section under the VIP trade plan area. We can also take a look at a little bit as to what happened in yesterday's review into today and see if we actually had any halfway decent movement or anticipated responses where we were expecting them. And along with that, we can forecast as to what we're looking for in the coming few hours to days. On the NASDAQ, one of the first things that we can see, obviously, is that it's down 0.34%. Effectively, on the day, it's not really done a whole lot as it rolls in towards the end of the day, but one thing that we can see is that we have deviated, obviously, underneath at 625, and not just underneath the 625, but with a decent continuation. I mean, the sellers did follow through really well. And if we combine all of the volume across the highs down to the more recent new low they just made, that puts a POC down at 14,522.5. And if we're looking at 14,522.5 measuring down, that gives us a downside objective here, the 1/2-to-1 objective. That is the scalper's target, which has been achieved and worked through. We have not hit the 1-to-1 objective yet, and that is also exactly where the longs, the swings, the 2-to-1s, the 3-to-1s, etc., back up to the highs. That's where they want to come in, right down there in the 13,690s to 501s. We're kind of not there yet. Now, if we were to subdivide the volume a little bit to give us more of a cleaner idea as to what's going on here, we have the initial rally up, and then we have the secondary push from the top all the way down to where we are now. And that gives us a relatively clean POC between the two. The first POC is sellers assumably trying to sell in, and we can see them building from about there on up until the 625s. Above that, they kind of gave up a little bit. When the market migrated its way back down underneath it, we can see that there was no volume there around their break-evens until we slid down into here, the 14,471s. Now, if we were to measure this up to give us an idea as to where that volume may be taking place, we can kind of see, okay, well, you know, maybe if this is the earlier break-even, these are some aggressive algo scalp points. Sure, but the major scalp area is down here, which pretty obviously they were able to achieve. That bounced them back up above the kind of nearer term POC, but all things considered, really, the market just rotated back down. Now we're back down underneath that POC and continuing. Looking a little bit closer to this more recent move up and then right back down again, one thing to consider here that does occur is a deviated play, meaning from the bottom to the top of this huge bull blow-off move, we take this same distance and measure it down, and that gives us a downward objective that we should expect the market to fall down to. Well, if we measure that up, down towards the lows, that gives us a downside objective with a 1-to-1 move at 13,764. We have the 3-to-1s and 2-to-1s looking to buy long starting from 690. Everything is beginning to stack up pretty obviously down here, and this means the zone of support is going to be right down there to kick the market back up. We can already see scalpers' responsiveness down here, really suggesting that we should expect this to keep on going. And it's hard to see, but if you look, the 2-to-1 objective is literally on top of the 3-to-1's long entry point. It wouldn't be a surprise at all to see the bears continue driving lower until we get down to a major zone of support, and man, we know where those are. The S&P is working out absolutely beautifully to what we were talking about yesterday. Whenever we have buyers who try to buy in, and they do have arguably a move up, but not enough to really fill the job, and then it rolls back down again. Whenever that's the case, those longs usually look to get out at break even. That's why we marked this area with an arrow yesterday, because that's the zone that's likely to push back. It's the earlier longs getting out. They don't want it anymore, and it cycles right back down to a new low. Pretty aggressive drop off of that. Absolutely perfect response. Couldn't have asked for a better move. Now, if we're looking at the overall cycling, we're still continuing down, and arguably 1, 2, 3, this could be the start of a very large move to the downside, and considering that the bulls have failed at the 2-to-1s off of the L2, well, realistically, then we should probably expect the 3-to-1s next. Now, I'm going to draw this up and draw it on top of one another and just put an L3, that way we can keep it similar. and not lose our place. And the L3 is right at the low where the market bounced off the base there. I mean, we can see kind of what's going on here. We're hitting some support, but it's got to get a little further down. Cataloging the overall volume, because it did make a higher low, although with that nice little trap inside of there. That first pulse in volume was, let's get that set to minute. Get that down there. There we go. And we got the volume loaded up. 43.17 is the POC of that whole move. But, I mean, really take in how much volume traded here. That is absurd. That's not a normal bell curve that you would see in order flow. Normally, you would see, you know, you've got the line itself, and you got the bell out into the volume and a distribution curve back down again. You don't see this where it's just a brick wall of volume. That's absurd. So if the sellers were looking to go down, they have obviously failed. And if we continue this all the way back up to a new high up here, we can see that that POC has not changed, 43.1750. If the market's going to pull back and we already know that they're failing up here and we have a twin reversal continuation back to the downside, what better spot than that earlier POC at 43.17.5? Money area of interest. And if the bulls are looking for a continuation phase that want to put their stops underneath the low, underneath that 94.5, their 2-to-1, 3-to-1 objectives are going to start reaching around 42.71 down to, let's see, get this all marked up there, 42.27.5. That's going to be the major zone of interest for the longs to kick it up from a 2-to-1, 3-to-1 perspective that have stops underneath the low. Now, if the bulls do show up with support here, we got to make sure that this lines up with something. What else can we stack on top? If we measure from the top all the way down to the POC, we can see that there's a 0.5-to-1 aggressive, not really much else going on. It's kind of difficult here. We're not getting the follow-through that we really want to find in terms of stacking zones of support. So it's really kind of got to hold up here. This is a tough spot, and if they can't get it to hold here off of this L3 back up towards at least the 45.78s, we could be in for some trouble. Noting all of the weakness that is going on, we have to assume that sellers will give it a shot with a stop above the highs, and their area of interest is going to be right inside of here to there. And that's going to be where the sellers, if they do want to give it a shot, are going to try to pressure back off of right inside of there. And that'll give us a little bit of an idea of how they want to play ball. On the Dow, we have a pullback, which is still dipping back down into the L2. I mean, this is the hotspot zone of interest, L5 into an L2 continuation, looking for follow-through. Incredible amounts of support down here. But now they're kind of churning a little bit further down. Something's a bit problematic here. Now, this could just be inside support that's kind of grinding its way down, maybe a wedge inside of here. Either way, one thing is very obvious. 1, 2, 3, and maybe even 4, they're all lower highs. We're not seeing a break above these highs, and without that proof from the bulls, I mean, who's going to back them? We know that the Dow is a dip buyer's market, but, I mean, dip buyers usually want to see at least a little bit of sideways support and a new high, then get the pullback, right? Get a little bit of proof. We don't have that yet. So, as it stands, let's mark this up here. We've got this descending wedge kind of grinding its way lower. If we can get a breakout pullback, we might have something going. It's also hard to ignore the left shoulder, head, right shoulder continuation, which may mean that we need a bit more momentum lower. Remember that head and shoulders pattern break level right there on the neckline is usually going for about a 2-to-1, and that's way down here. So we've got a lot of distance if these bulls don't hold up in the L2, where what's left? What's going to hold them up? And then all of a sudden we start collapsing, and that might only take a day or two. We know how fast this can go. And then we're down in those 33,000 zones of support again. And finally, from the volume perspective here on Dow, we have 33,144 as a major area of support for a POC for the market to come back to. If we combine this with the top and drag this further forward to give us a context, we have a POC that's ranked up at the top, 34,729. If the buy, I mean, that's basically the neckline. If the bulls were trying to get going, they've really failed here, and this last reach higher could very easily be a break-even point before another break lower, and all of a sudden, we're off to the races really aggressively down. Over on gold, we've got some really, really nice back and forth kind of sideways choppiness off of the highs, and the concern was that we had this nice move up, L3, L4 dip, rally into a new high. But this pullback was an L2. We really needed to see an L1 there to keep that context going, and with that L2, breaking to a new high is concerning. They had a disappointing response the first time around, so chances are they're going to be a lot faster to jump ship. And that's exactly what we're seeing. They poke their head above the highs and whack-a-mole right back down again. This could be a little bit of a problem. The bulls are looking and obviously interested, but they need a bit of a pullback. They don't want to buy way up at the top, and that means that we're going to have to buy the dip. Scalpers don't have anything of interest until 1951.3, down to the POC stacked at 36.3, a little bit lower to the 2-to-1, 3-to-1 pocket, which is at 1921.9 to 14.6. I mean, remember, this is after this massive break-even test down at 1902.1 that this is bouncing back up. So we've got to give it the bullish edge. At the very least, the bears got out. And now that we have a new low, the megaphone kind of base down here, now a continuation back up and it's still going. If the bulls do want to keep it going and we break back above these highs and hold a nice dip, we've got a lot of room to go. And 2000 might not even be near the top of where it could go. Crude is showing up to the party with a monster lift to the upside here. Holy cow. Currently, it's up 7% and rallying back above 100 again. The lows we were just talking about down at 93. 93? What 93? We're over 100. This thing's screaming higher. We finally have a break of falling resistance, somewhat. It's not the best break in the world, but, you know, given everything that we've got going on, it's either that or way the heck up here. And, well, the bulls are going to take what they can get, right? That doesn't mean that they're going to buy way up here. That's not what they're necessarily looking for. But it does mean that we're breaking some of this structure. This is showing that the bulls have at least enough to stop the bear pressure on a pattern. We have not broken a previous major swing. We haven't broken a previous major swing, so that means that the bear trend is still technically intact and working its way lower. And notably, we also have not made a new major low. That lack of the new major low down there really suggests that the bears might be in some problem territory here. If we look at the volume, the initial drive from this, let's go from the top on the way down here and kind of see where they are. Let's go on to minute. And that's back at 103.22. So here's the concern, okay? This is a really, really strong rally up. Whenever we have a really strong rally up, the first thing that comes to mind is, are they trying to get out of break even? Are these earlier traders trying to get out of break even? Because every time we have a really strong rally up and it hits a POC break even and fails, it ends up rolling down to a new low. So if we hit this, and it pings right back down off of the 103.22, this could get really problematic, especially back underneath 100. We could easily see crude oil back into the upper 70s by next week if that's the case. And then over on Bitcoin, Bitcoin has the L5 continuation down, but so far all we've been able to get is an L1. We still can't get the L2 pullback. It won't go far enough. We keep trying, but it just won't quite make it there. Notably, we are also coming back to the earlier zone of interest where the bulls started buying. It's still a bit ahead of it, to be fair, but with this drive down, we've got wave 1, wave 2, probably wave 3. Nice that they're pausing ahead of the test, because then they can go wave 4, wave 5, and complete it back down into the earlier support zone. Another caveat here, how many stops do you think are parked underneath all of these lows that Goldman and JP and the crew would love to just gobble up? I bet they're real tasty down there, and there's a lot of stops that look pretty juicy for them to try to pump back up. One notable thing that does stand out, if we go from the bottom all the way to the highs and look for the 2-to-1, 3-to-1 pocket, it's right here. We are getting very, very close to the 2-to-1, 3-to-1 pocket, back inside the highs. Just to make sure that we've got room for the targets, we'll go all the way down to 37,000, basically 500. 38,800 to 37,500 is going to be the major zone of support that the bulls are trying to keep up. If they lose their grip there in the earlier L4, the 2-to-1, 3-to-1 pocket up, they're going to have a really, really bad time. All right, well, that's going to do it for the overview going into tomorrow and kind of taking a look as far as everything that's happening on the price action side of things. From the news calendar perspective, we've got the crude oil inventories tomorrow. Tomorrow is Wednesday. The crude oil inventories previous 1.654 million. Now remember, one important thing that happens on Tuesday is the API report. And the API report can give us an idea as to what to expect. And if we look at that API report, holy moly, 7.757 million was the actual, forecasted 1.367. just a casual 6 million off, no big deal. Very, very bearish. That is not good. But wait a minute, bearish? The chart is screaming higher. You can see those dominoes falling like we were talking about. That's what I'm saying. This is very nerve-wracking for a possible false rally up. That API report giving us an idea that 7.757 is what to expect. Tomorrow's crude oil inventories previous was 1.654, and we don't have the forecast yet. Generally speaking, the API is very, very close to what the number comes out as. We should expect around a build of 7.7 million, way worse than expected. That's really about all that we've got going on for tomorrow, though. At 8:30, they do have the PPI numbers. We're really not trading that early in the morning. I like waiting until at least 9 before we do much. But before the market open, it does have something going on at least. Forecasted 1.1%. Previous was 0.8%. So with the news out of the way and all the charts and everything out of the way and locked and loaded and ready to go, we've got another day locked in and under our belts. Thanks for hanging out with me for a little while we get our charts and everything locked for tomorrow. We'll be launching the DP levels tomorrow morning after we have all of the final calculations at midnight, or at least after midnight until we go into the new session. And then we can rock and roll going into, what is tomorrow? The 13th. Enjoy. I hope you had a fantastic trading day today, and we will see you all tomorrow. Thanks for watching. Bye.
We do